What if I told you that everything you know about prop firms is actually a lie, and believing this lie is what stops most people from ever getting a payout with prop firms? In today's video, I'm going to be revealing exactly what this prop firm lie is, why it keeps most traders unprofitable, as well as an alternative approach to trading prop firms that makes it almost a statistical certainty that you profit in the long run, along with the full risk management plan for this system and the full technical strategy that I'm using for this strategy as well. And by the way, if you don't believe that this actually works, this is the exact same system which enabled me to get payouts such as this one and go full-time in trading 2 years ago. Also guys, if you can stick around until the end of the video, I'm also going to be giving away a few free resources to help you implement the system that I'm going to be walking through in today's video as well. So with that being said, let's go through what this big prop firm lie actually is. So the prop firm lie, what actually do I mean by this, right? So I'm sure you've heard the industry tell you that when you pass both phases of the prop firm challenge, phase 1 and phase 2, that you're going to be trading with real money, right? You have a 100k account that you pass and then the prop firm gives you 100k to trade with, right? Most people think that either this is real money or that the prop firms are copying your trades and this is how they're making money. But this is completely false. No prop firms are actually copying your trades. They're not A-booking your trades. They are making money from you losing challenges. So what this basically means is that the prop firms are set up in a way that they make money when you lose. So the rules are set up and engineered in a way such that the system and game is rigged to make you fail, because that's how prop firms make money, right? However, we can flip this in our favor and make money from it by using a slightly alternative approach, which is going to be what I'm going to walk through in this video. So when we're trading prop firms, right, what they're basically asking us to do is do an account flip. So think about this logically, right? For most prop firms now, we have to make 8% phase 1, 5% phase 2, so 13% in total, right? But we only have maximum 10% drawdown. So in order to make this 13% gain, right, we only have around 10% in equity. So what the prop firm is essentially asking you to do is make a 130% return, right? Very, very unrealistic, especially if you are only risking 1% per trade. I'm sure if I asked you to do an account flip on your personal account, you probably wouldn't risk 1% per trade, right? Because it's going to take you years to reach this 130% return. So logically what you would do is you would increase the risk, except that you might blow that account a few times, but eventually you would probably flip it and make the 130% return, right? So this is most people's approach to prop firms. They treat it like a real account. They use 0.5 to 1% risk on challenges, and they simply waste several months trying to just pass and get to a payout, and then they basically spend several months, right, making demo profits and not making actually real money. This is just an ego boost. You're not actually making real money, you're just making demo profits. So it's a complete waste of time to be spending this amount of time doing the challenge phases, because it's just demo profits. You're not actually making any money, right? So I would like to propose to you a different approach, and this is what I'm going to be walking through in this video. I call this approach the probability approach because it's based on probability theory using some advanced statistical analysis, which, don't worry, I'm going to be completely explaining for you guys in a simple terms. So let's head over to the whiteboard now, and I will reveal this entire approach to you guys, along with all of the risk management nuances and the technical strategy as well. Alright guys, so thanks for joining me here over on the whiteboard. So bear with me, this is going to take a little bit of explaining, but it's a very simple concept once you can wrap your head around it. So let's imagine we start off and we have 10 prop firm challenges, right? The difference with this approach to most people's approaches is that we are considering the outcome over a sample of 10 challenges rather than on individual challenges, because even the best prop firm traders in the space are still going to fail challenges, right? No matter how good of a trader you are, eventually you're going to hit that losing streak and lose a challenge. Nobody wins every challenge, so it's best to think about this over a sample of challenges. Here I've chosen the number 10 just because it's a nice round number. Before we start, we're going to make a few assumptions. We're going to be using a mechanical 1 to 3 risk to reward ratio per trade. Let's assume we have a 30% win rate, so a relatively low win rate, right? One that's very attainable for most people. And we're going to be using 2% risk on phase 1. So let's imagine we take one trade. What are the possible outcomes after we've taken this one trade? right? So if we have a 30% win rate, it's expected that we are going to win 3 out of the 10 trades. And by the way, we're trading these challenges separately. So we're placing one trade on one account, then moving over to the next account, and then the next account, and so on and so forth, right? So first of all, trade 1, the outcome is going to be that, or the expected outcome is that we are going to have 3 accounts that move into profit of 4%, right? So we have these 3 accounts here. They're parked nice and safely. We're not touching them again for now. The other accounts go into drawdown of -2%. We have a 30% win rate, so 7 of those 10 trades are going to lose for -2% because we're risking 2% on phase 1. Then when we take a second trade on these accounts, the expected outcome is that 1 account gets passed, right? Because we're winning 1 in 3 of these trades to move up to the 8% profit target. 2 of them will lose, going back to 2% in profit, but these ones are still nicely in profit, so we're kind of safe on these ones. Of the losing accounts, right, around 2 of them are going to go into profit of around +4%, and then 5 of them are going to go into further drawdown of -4%. Again, like I emphasized before, a few of these accounts are going to be blown, but that's completely fine, as you will see at the end, where we go through the total profit that you can expect to make over the course of these 10 challenges with the 30% win rate and with the 1 to 3 risk to reward, right? And we keep repeating this process of doing 2% risk until some of the accounts are blown and some of them get passed, right? This is just a maths game. Some of them will get passed, some of them will get blown, but we don't really care because overall we are going to make profit, as I will be showing you guys here. So we continue this all the way up to what I've called here trade N, which is just like a big number. Let's say trade 10. This is obviously going to vary depending on each iteration of this process, but for now, let's just call it trade N, right? So the outcome across 10 challenges, the probability that we pass an account is around 59%. Very good likelihood, right? And that's, again, only using a 30% win rate. If we have a 30% win rate with a 1 to 3 risk reward, we can pass 60% of these challenges, and the probability that we blow an account is 40%, right? But how we're going to make money with this, as you guys will see, is by securing more payouts than what the challenges cost. So let's go through some of the maths. Let's say the 10 challenges that we took in stage 1 were 100k challenges. Obviously, you can scale this up and scale this down if you're using 10k accounts or 50k accounts or even 200k accounts, whatever the case may be, depending on what your budget is. So let's say the cost per account is $500, right? So we've spent $5,000 to get these 10 100k accounts. Again, like I said, if that sounds like a lot of money for you, you can scale this down to 10 or even 5k accounts, and then it's only going to be, you know, like a couple $100. Maybe $600 for 10 5k accounts, for example. So like we said here, right, the probability that we blow one of these 10 accounts is around 40%, meaning that 4 out of the 10 challenges will be blown, right? So we lost 4 minus $2,000. Not a very good start. However, we now also have 6 live 100k accounts to trade with. Again, I want to re-emphasize this. Live meaning it's not actually real money, right? But we're getting payouts based on the amount of profit we make on the account. So for example, if we make 10k profit, we get to keep 8. We don't actually have the 100k, but we're making profits from it, right? That's how prop firms work. That's how their business model works. Now, if we trade them separately, we're using 1% risk per trade on this live challenge. So whereas before we were doing 2% risk on the challenge phases, we're now dropping to 1% risk because we want to treat the live prop firm account as if it was actually real money, right? That's the difference between the live account and the challenge phases. So if we're using 1% risk per trade, we can calculate this. The maths behind it is quite complicated. I'll reveal that in a moment. But essentially, we will make $18,912 in payouts after the profit split. So this gives us a total profit of $16,912 if we take 10 100k prop firm accounts with a 30% win rate and a 1 to 3 risk to reward ratio per trade, using 2% risk on phase 1 and 2 and 1% risk on the actual live accounts, right? And the maths behind this, for anybody that's interested, and how I arrived at this number is essentially I use this probability theory called random walks, which basically means that there's a certain probability that we jump forward in trading. This is your 3% gain on winning trades. And there's a certain probability that we jump backwards, which is in trading the loss. So for example, minus 1k loss. and a plus 3k gain on the winning trades. And the account is obviously blown when we go to 10% drawdown. So if you keep repeating this model until either the account is blown or we get a payout, you end up with $18,912 in payouts before all of the accounts are blown, right? So in total, like I said, we've made $16,000, even though we passed only 6 of those challenge accounts and blew 4 of them, right? So this is the approach to treating prop firms that I want to re-emphasize. We're not considering individual challenges. We don't really care about the outcome of an individual challenge. We accept that some of the challenges are going to be blown, but if we have a sample of 10 challenges, 100 challenges, over the course of that sample, we are going to make money even if we only have a 30% win rate, right? So that is the approach that I want to emphasize in this video. Now, obviously, we also need a technical strategy for this to work, right? We need to have that 30% win rate with a 1-to-3 risk to reward ratio per trade, and we are going to do this by technical analysis on the chart. So in the next part of this video, I'm going to be revealing the full technical strategy that I use, and in actuality, the strategy that I'm going to be revealing in the live market over the past 5 years worth of data has actually had a slightly bigger win rate than that, with a 45% win rate with using a mechanical 1-to-3 risk to reward ratio per trade. So guys, thanks for joining me here over on the charts. As I said, we're going to be revealing the actual technical aspect of this strategy next. We've covered the risk management and we've covered the sample approach to trading prop firms and the probability approach, right? So how do we actually go about entering our trades to achieve that at least a 30% win rate with a mechanical risk to reward ratio? So what we're doing here over on the charts, I'm on Euro USD. We're going to start on higher time frame and work our way down. So here we can see that price was overall bullish. Price had retraced into this area of demand. We then had a breaker structure right here. So what I'm doing in this first step is basically just identifying overall market structure and direction. Here we can see that price was overall bullish, meaning I'm only looking to take buys in line with that overall bullish trend. Here we can see that price retraced down, tapped into this daily demand zone and swept some daily lows to the left, right? There we go. All we're doing in this first stage is identifying this overall bullish trend and the overall higher time frame direction. Now, once price tapped into this area of daily demand, this is where we work our way down to the lower time frames to reveal the bigger picture and exactly what is going on a more macro and micro level. Sorry, on a more micro level on lower time frames. So once price tapped into this daily demand, we then see price start to shift back bullish, right? On hourly time frame, it was in this downtrend structure, but once it reached this daily demand, we very clearly see it shift back bullish. All of this volume came in, price broke the most recent lower high and shifted back bullish, right? We then see price once again very clearly continue heading over to the upside, creating more bullish structure like so, right? So now what we want to do is, now that we've basically ascertained that the higher time frame trend is bullish, we want to look for a valid point of interest where we're going to buy from. And for myself, this valid point of interest is very simply an imbalanced area of demand. And in order for this imbalanced demand to be valid, we need to see a few different criteria met. The first one is that it needs to create imbalance. Right, so we need to see some imbalance created. This basically just tells us that this is an area where people were willing to buy from in the past, so they're likely to be willing to buy from this area in the future. We need to see some liquidity taken out into this area on higher time frame, and then all we're simply doing is we are waiting for a lower time frame confirmation in this area. So here over on Euro USD, you can see that we had this area of imbalanced demand just here. This one was very nice because we had this inducement resting above it, right? So a nice bit of liquidity above it. Our two criteria are now met because this area created imbalance. We've got an area of liquidity resting above it. So all we're doing now is waiting for price to sweep that liquidity into this area of demand, right? And the reason why this strategy is so powerful and the reason why it works so well is because even if we are wrong about higher time frame direction and price eventually continues lower like this, we know that because price has swept this higher time frame liquidity, we're at least likely to get a bounce from this level, right? And that's all we need, because when we go over to the lower time frames, we're only looking to target some small intraday levels, right? So in order to enter trades, I'm always using the M5 time frame on every single trade. That's important because I want to make this strategy as mechanical as possible. So M5 chart on every single trade in order to get our entries. And all we're simply waiting for is an M5 change of character. So for anybody unfamiliar, an M5 change of character is just when price goes from printing this bearish structure and then flips back bullish by breaking above the most recent lower high. If we're looking for sells instead, it's when price is in a bullish market and it breaks below the most recent higher low, and then we look for a pullback to sell down, right? So this here would be the change of character. It's a sign of a trend reversal, and that's exactly what we want to see here, because we want to wait for price to show us that it wants to hold this demand, and to do that, we're basically waiting for it to shift back bullish in line with higher time frame. We then identify an area of imbalanced demand. If there's no imbalanced demand, I'm not entering, because we need to see this in order to validate the trade. So once we have that change of character plus an area of imbalanced demand, I'm very simply setting a limit on this area of imbalanced demand. I'm placing the stop below the low that caused the change of character, or before the high if we're looking for sells, and I'm going to mechanically target a 1 to 3 risk to reward. So all I'm doing is dragging the risk to reward tool to a 1 to 3, and that's exactly what my target is going to be. As I mentioned, this strategy for myself had around a 45% win rate with a 1 to 3 risk to reward, so that is more than enough in order to get very nice profits from prop firms, as we just went through previously. And as you guys can see, this trade eventually did end up playing out. Obviously, not all of these trades are going to lose. This one was obviously cherry picked because I wanted to show you guys a winning trade example. Sometimes this will lose. Like I said, we only have a 45% win rate, but that is all you need in order to make a lot of money trading prop firms, as we just went through previously on the whiteboard, right? So that is how you beat the prop firm game using probability theory. Remember, guys, as well, we only had a 30% win rate, meaning we lost 7 out of 10 trades and still managed to achieve this very profitable outcome, making $16,000 over the course of those 10 challenges. So prop firms aren't really about winning every challenges. They're a probabilities game, and the best loser wins, meaning that the people that can handle the losses the best are the ones that are going to profit in the long run. Now, if you want to see more trade examples, I recently backtested gold over an entire year worth of price action here on the channel, which you can check out here next. If you want to attend our daily live calls and go through the system with myself in more detail, I'll leave a link to that in the description below, along with the free trading plan document for the strategy that I went through. So as always, guys, I hope you enjoyed this video. Make sure to like and subscribe, and I'll see you in the next one.